Hey traders, this is Scott. This is the only 60-minute strategy that you will ever need. All right. So I'm Scott Barkley, founder of ProAct Traders, and a trader and a trainer for 2 decades. I'm also the author of the book, The Empowered Forex Trader Strategy to Transform Pains into Gains. It's available on Amazon. Now, for the last 20 plus years, I've specialized in taking the complex part of trading and making it simple. And that's why I wrote the book, to help traders get it. I have found significant ways to teach the banker's methodology, which is price action, by the way, and making it easy to understand. But simplicity in a complex environment only works if the trader commits to the process, does the work to gain understanding, and follows a blueprint for success. All right. So why am I saying this is the best 60-minute strategy? All right. Well, first of all, we are intraday traders, as are the bankers, by the way. All right. Now, there are bankers at the bank traders that are doing, swing trading and position trading, but by and large, the bankers are intraday trading. All right. Now, scalpers trade a 15-minute, a 5, and a 1-minute. They're looking for 5 to 20 pips. A recipe for disaster. You will fail. You will not make it if you do that. Intraday trading, however, uses the 240-minute. We use that to understand the structure of the market. We use the 60-minute to say how close is it to coming, and then the 10-minute to actually take the trade. We're looking for a minimum of 55 to 150 pips a day. Swing trading is a 240-minute to 60-minute. They're looking for 150 plus pips. And position trading, they're trading off the weekly, the daily, and the 240, living through 200, 300, 400 pip pullbacks. Right? So bankers, I'm talking about the intraday ones, all right, they trade the 240-minute chart, and they enter and exit on the 60. Now, you and I enter on the 10-minute. By the way, never enter on a 5. It's too fast and has too many false positives. And the 15-minute is too slow. All right, so you need a 10-minute chart. Well, I'm on MT4. I don't have one. Well, you're responsible to change the default to a 10-minute. All right. All right, so we enter on the 10-minute, but we only do that when the 60-minute chart has confirmed the trade setup. Unless the big boys see it, they will ignore it. Why? Because the big boys are called market makers. Market makers make the market. If they've never looked at a 10-minute chart or a 5-minute chart or a 15. The lowest they go is 60. So unless it's seen on a 60, the bankers will not react to whatever is happening. All right, so here's an example. You're waiting for the breakout on the 60-minute chart. You can see it right up here. All right, so I got slope support. I'm looking for a breakout to the downside to here. All right, so I'm waiting. All right, I'm on a 60-minute chart. All right, then I get the open and close outside of slope support. All right, now that's the agenda. That's the telegram that the big boys are telegraphing to all professional traders who know what they're doing. All right, open and closing a candle is a big deal on a barrier. All right, so once that happens, I now have permission to go to the 10. I am not allowed to go to the 10-minute chart unless I have already got confirmation on the 60. So when I go down to the 60-minute, I got plenty of time here. By the way, it takes 20 minutes to just do a break, hook, and go. You need a break candle down. That's a 10-minute candle down. A hook back up. That's a 10-minute candle up. That's 20 minutes. That's the minimum. And as you can see here, it took an hour. All right. So, but what clued you in that the big boys would take that? All right, the 60-minute told you that, not the 10. If you're looking for a trade on the 10, you're not where you're supposed to be. You're supposed to be looking for a trade on the 60, defining where the target is, defining where the barriers are en route to that. So you can see here on the break of this, we had a barrier, which was the fib. Notice that they have absolutely respected that fib, because if it's their numbers, they're going to respect them, right? When they pull down and open and close the candle down here, that's the agenda we're going to target. But what happened? They ran out of sellers. They come up. There's the close in reverse. It says, okay, now we can go. And man, did they fly, right? All right. So now let me show you a way to use Heiken Icy charts to help you stay in the trade. Now, most charts have a Heikin-Ashi option to change the candles temporarily, by the way, to this type of chart, all right? Now, at ProAct Traders, we include it as a separate set on the same array. So on our charts, we automatically have 3 of them, all right? We use 3 of them side by side on a 240, a 60, and a 10. This is the 240, the bankers are selling. This is the 60, the bankers are selling. This is the 10, the bankers are selling, all right? This also gives you the order flow for the day, all right? So this shows harmony on multiple time frames, all right? When you're stuck on MT4, you don't have these 3, all right? So the only way you're going to be able to do it on TradingView or whatever is to change the chart that you're using, your main chart, and change it to Heikin-Ashi, all right? Now, obviously, the more confirmation you have over multiple time frames, the easier it is to tell whether the currency is going up or down or sideways, all right? And that's why we have 3 of them. But if you're not using our charts, you don't have that opportunity, all right? So, all right, you can see here, we're definitely going down in the 240 world. The bankers are sellers. Down here, the bankers are selling, actually have just finished selling a big new part to the downside, as you can see, doing a sideways move. Over here, what are they doing? They're going down, 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 down. Anybody want to buy it? Nope, not me. All right, so why do we use Heikin-Ashi charts? Well, Heikin-Ashi candles take all the noise out of the currency, and it's because of the way they are formed. Every new candle opens at the halfway point of the former candle. Now, that candle could be a doji in the real world, but it will appear solid in the Heikin-Ashi world, all right? Unless it is actually a doji, as you see here. All right, so let me show you how this works here. All right, so you can see here, this candle went up and came down. The next candle opened at the halfway mark. This candle went up, came down. This one opened at the halfway mark, opened at the halfway mark, opened at the halfway mark, opened at the halfway mark. Coming to the downside, open at the halfway mark, open up the halfway mark, open at the halfway mark, open at the halfway mark. See that? All right, so they give you a huge piece of information. First of all, it's very easy to see who is in control of this currency right now, all right, or in the past. The bulls had it. The bulls had it. The bears got it. See how easy it is to see? All right, all right. So, how can I use it? One of the hardest things for retail traders to do is to stay with the trade, all right? So, as soon as you see a pullback, you bail on the trade, limiting your pip capture, and also totally screwing up the math that resulted in you deciding it is a good reward to risk trade. Okay, I'm going to risk 30 pips here. I can see the target's 50 pips away. That's almost 2 to 1. That's a great trade. Oh, it's going back on me after 6 pips. I'm clicking out. You just risk 30 pips, 35, for whatever your stop is, to make 5 or 6. All right? Now, that's normal for a retail trader. It never happens to a professional. Okay, you would never trade that way. All right. So moving your stop behind the currency move and holding until you see the wick in the opposite direction. Remember, because the new candle opens halfway up on the former candle. All right. Any movement greater than 50% against you is going to show up as a wick. All right. So that means move your stop. All right, don't bail on the trade, move your stop. All right, so let's work this up and down and you'll see. All right, so you can see right in here. All right, so let's say we just took the, just turn to the up, we'll take the pullback. We'll take the pullback here. All right, so we got a pullback right here. And as soon as we break up to the upside, all right, we get into the trade down here. All right, our second trade, by the way, would come in up here. This is where trade 2 goes in, right here. All right, and so no wicks, no wicks. Keep it going. No wicks. Keep it going. No wicks. Hold. Keep moving your stop. Moving your stop. There's the wick. All right. Move your stop right below it, and you get stopped out right there. But what did you get stopped out with? Total profit. All right. Let's go to the downside here. All right. All right. Opens up halfway. No wick. No wick. No wick. No wick. Wick. See that? All right. Move your stop. Where do I move my stop? You move your stop to the last part. Right there. All right. So what am I doing? Well, now I'm risking this for that. See that? Now the next candle opens and it takes off to the downside. All right. Hold. hold. What should I do right now? Next candle opens halfway. If there's no wick, if it doesn't do that wick to the upside, hold. All right. So what do I got to remember here? Heikin-Ashi charts cannot be used for actual price since they're giving you a range. Remember, it's opening at the halfway point of the candle. It might be a doji there, but it's showing you a whole candle. So if you decide you want to use Heikin-Ashi, you start your trade on Japanese candlesticks. All right. After your entry and placing your second trade as an entry order, you never do not do that. All right. Switch to Heikin-Ashi, or in our chart, you already got 3. You don't have to switch anything. All right. So every time the 60-minute opens, a new Heikin-Ashi candle, watch. No wick, stay in. No wick, stay in. Now, by the way, you can go down to the 10-minute chart. All right, that's all going to happen 6 times faster down there. But you could also do the same thing on a 10-minute chart. But it's going to take you a while to get used to that because things happen a lot faster on a 10 than they do on a 60. All right. So move your stop when you get the first wick. Hold. Hold, hold for the target. What if the next candle opens and it never gets a 50% retracement? You're still in with multiple lots to the target. All right, so let's go take a look at a couple of these live here. So let me pull up the charts. All right, so here we go. All right, so well, you can see this move right here, all right, to the downside. It's one I've been using in the example. All right, you can see. All right, now we're moving again here. See that? We're moving again. All right, 240 says, hold the trade, all right? What does the 60-minute say? Hold the trade, all right? What does the 10-minute show you? Up, down, up, down, up, down, up, down, up, down. But it has not retraced 50% of this former candle. What should I do? I should be holding this trade. I should be in it, holding for the next target, wherever that happens to be. Let's go take another one over here, pound New Zealand. Okay, there we go. All right. You can see here we had a flag pattern, actually a descending wedge, and then we took off to the downside. All right, so what should I do down here? All right, what is everything in your brain telling you to do? All right, I'm on a 10-minute chart. It says it's done, it's done. Okay, is it done? All right, I'm just going to change this one to Heikin-Ashi. All right, so on our chart, we just go over here, change the charts, and I don't do this very often, so view as Heikin-Ashi charts. Okay, now watch what happens to the charts when I do that. See that? See how they changed? All right. Now, what did it tell me here? Move your stop. You got wick. You got wick. It tells you to move your stop. All right. What about in here? Hold the trade. Hold the trade. Hold the trade. All right. So there you go. Let me change that back. And we'll look down here on the 60-minute chart. See there? Right there. What does it tell you? Hold, 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 hold. Right? This is why I tell you, you can do it on a 10, but it's going to give you different information. So hold that trade. Stay in that trade. Move your stop, protect your profit, but hold for the next target. That's what you want to do. We'll look at one more here. Let's go over to, let's do the pound. Everybody loves to trade the pound, so we'll go over here and look at it. And you can see here, well, that's a fundy right there. So we'll go back in the past and look at this little part right over here. All right. All right. So what does it say over here? All right. All right, you decide to get in, you're in, you're in. Oh, wick, 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 wick. Get out. And look at that reversal that you missed because you followed the candles, which what they told you what to do. You got wicks. Move your stop. The first wick happened right there. Let me point it out to you. I'm going to make it big. And that first wick is right here on that candle. That's when you move your stop and you don't give all that back over here. See that? All right. So, all righty, there we go. Hope that helps you, everybody. It takes a little bit in the beginning to get used to it, but it's worth it. All right. So, at ProAct Traders, we've trained bank traders, hedge fund traders, prop traders, full-time professional traders. Most of our traders are just trying to supplement or replace their income in the fastest way possible. All right. And our teaching programs and over 200 videos on our site are designed to do just that. And of course, you can download the book on Amazon if you want it. All right. Now, we have proven methodology. Our traders make hundreds and hundreds and hundreds of pips a day. And we have award-winning software to show how they do it. We'd love to have you watch us do this in real time in a live room. So just go to proacttraders.com, sign up for a 10-day demo, and you can see traders making hundreds, if not more, pips doing what this video is all about. And by the way, it's free. So don't forget to like us. Make sure you subscribe so that if I put another video up, you automatically get notified there's a new video that you might want to watch. Have a great day, everybody. Talk to you soon.